If you're a business owner, you've probably heard the advice to separate your business and personal finances. And it makes sense, right? Common sense would tell you the same exact thing. But have you ever wondered what that really means and why it matters so much? I'm Daniel Miller. I work with business owners just like you to help steward their wealth with purpose and generosity. Today, we're talking about the dangers of blending business and personal wealth. We're going to cover strategies for keeping them distinct and how that separation can help protect your assets, as well as bring clarity to your financial decisions and ultimately help give you confidence. Before we talk about how to avoid blending finances, it's important to understand why this is such a harped on topic among business owners. The very first thing, which you probably could have imagined yourself, is the tax complications. If business and personal expenses are mixed, you risk losing legitimate deductions, or worse, facing an audit challenge from the IRS. I see businesses that are early in their startup, often coming out of home offices or garages, slipping into this one really easily. All it takes is a couple swipes with the wrong credit card, and at the least, you're spending a few hours in April sorting out which expenses were business versus personal, and at the most, a massive IRS audit, which could end up costing you a lot of money. The next issue when business and personal finances blend is the legal exposure. When business and personal accounts overlap, courts can treat your business and personal assets as one. That means a lawsuit against your company could threaten your personal savings or home. If you have documented separation of accounts, you're protected from this issue if it arose. A third one I've seen quite often, which ties into our tax concerns, is the cash flow confusion between personal and business spending. Without a clear separation, it's difficult to see how your business is truly performing. You might feel profitable, but actually be covering shortfalls from your personal accounts without realizing it. And with that, overall, we just see a lot of stress and uncertainty when these two become entangled. Questions like, where is that money going? What is safe to spend? How is our business actually doing? These questions can carry a lot of weight when things are messy. Now that we understand why this is such a key part of running a business, let's discuss some strategies my clients use to maintain healthy financial boundaries. The first and easiest strategy, especially when you're a startup in the early stages of your business, is to just use separated accounts. This one seems like common sense, but far too often I see people early in the startup stage take way too long to open up a business account. The online application process can take as little as 10 minutes and is without a doubt worth it as one of the first steps to take in your business's life. All you need are your employer identification number, which you can get for free from the IRS website and only takes about 5 minutes, your LLC documents, your articles of organization and operating agreement, your personal identification, whether that's a driver's license or a passport, a business address, and if you are just starting, there's no issue with this being your home address, and an initial deposit depending on the bank you're going through. If you haven't gotten an EIN and LLC, at the bare minimum, you should consider opening a separate account in your personal name for better accounting records that you use exclusively for business purposes. Once you have these accounts set up, you should be paying yourself a salary or distribution. Whether it's a percent of sales or a set annual salary, make sure this is predictable and trackable. If you don't pay yourself a salary, it's much easier to start pulling random amounts from the business. Because of this, you never actually know what the business costs are, and your budget can become a guessing game. Paying yourself makes clear lines, your business income stays in the business, and your personal income stays in your household. Not only that, but this could also save you legal trouble in an audit. Mixing money between your personal and business finances give the courts a much easier case against you and your business that they're one entity. This is going to make your taxes much more predictable. Owners that don't pay themselves end up with surprise tax bills, confusing records, and messy bookkeeping. Do your accountant a favor and keep things consistent. The financial advisor in me also knows how hard it is to plan around inconsistent income. When your income is random, it's harder to budget, save, invest, and plan for big purchases. Paying yourself allows for stability and predictability. When we get predictability by separating these two finances, you're able to plan for your personal and business lives at a strategic level. This is going to make it much easier for your wealth management professional to plan for you long term. This will allow us to run projected retirement timelines more confidently, run tax strategies that match your actual income, and we're able to build an investment plan that aligns with the true cash flow you have available. Even more importantly, though, the clean separation allows for proper business valuation and exit planning. With predictable finances, your advisor can reverse engineer a retirement plan, create a tax-efficient exit strategy, and transition you from business owner to financially independent retiree with confidence. The benefits of separate finances are many. A quick recap of some of them are: asset protection. Distinct boundaries shield your personal wealth if your business faces financial or legal challenges. Financial clarity. You'll have a more accurate picture of cash flow, profitability, and tax obligations. Better decision making. When we have that clarity, we can price services realistically, plan investments, and confidently prepare for growth. And finally, the most important is assurance. Knowing that your personal and business lives are secure and well organized brings stability, something every entrepreneur needs. If you've built a business that supports your family and your purpose, you owe it to yourself to protect that foundation. Creating financial boundaries is one of the simplest but most powerful steps toward long-term confidence and stewardship. If you'd like to learn more about how to coordinate your personal financial plan with your business goals, my team and I would love to help. We help business owners all across Ohio design clear and organized strategies. You can reach me through the link below. Scheduling a 30-minute call is incredibly easy, and I promise you will leave glad that you took the time to protect your future. Thanks for watching, and remember, your business is a tool, not your identity. Use it to serve your family, your team, and your future.